What an announcement! Alibaba is currently up 6% in the pre-market on the news that it's going to split up its main business into 6 core different business units. I was just wondering at the back of my head, why not just announce that they're going to split themselves up into 100 different parts? Maybe in the pre-market it'll be up 100%. But all jokes aside, I think I'm just going to share my very short opinion into this entire idea of breaking up the businesses and whether is it net accretive or whether is it dilutive to shareholders. And of course, always don't forget to smash the cute little like button just to boost my little ego. Now, I think just to back to the main news itself, Alibaba actually did announce that they're going to split up themselves into 6 different verticals, namely cloud, e-commerce, which consists of Taobao and Tmall, local services, Cainiao, the media arm, and also the global digital commerce. So I think generally, for most Alibaba investors out there, that is also how we generally look at how they distribute themselves as part of a global business and an enterprise. And that said, it is also alluded that this is one of the most significant governance overhaul. So what do I mean by governance overhaul? They did say that, hey, as a conglomerate, there is probably priorities on an enterprise level. Maybe they think that e-commerce is the more important sector, so some other business segments will have to give way in order to meet their priority needs. However, if they actually do break themselves up into these 6 separate segments, it is alluded to the fact that, hey, they're going to have 6 different CEOs running the different business units. So by having that in mind, or having that context in mind, it means that individual business units report to the individual CEO. And of course, Daniel will be the overall in charge where the 6 different CEOs actually report to him. So from this perspective, they can then individually prioritize and individually set business and enterprise goals so that they can't really say that, oh, we are not growing our cloud because we are dedicating a lot of resources to the e-commerce arm specifically, or what have you not. And more importantly also, this entire idea of splitting the business units, they can then personally, on an individual level, go and seek refinancing, whether they want to tap into the financing of the capital markets, whether they want to go into IPO and stuff like that. So these are generally some of the pros in terms of breaking up the business units. But that said, some of you might ask me, hey Chiking, is it not the same? It's still the same Alibaba group, the same resources that are being allocated around. I'm sure you can have different people stepping into different senior positions, but ultimately, it's still the same business and the same cake. We are just essentially cutting it into smaller pieces. And yes, I totally agree. But I think based on the discussion itself, that whatever I just said, it's essentially the same pie that is being split up into smaller pieces. But that only works theoretically. So in practice, in practical sense, in the reality world, it isn't so nice and dandy. So to give you an example, I think a lot of people, especially in the investing world, likes to use this valuation model called sum of the parts. So what you do in the sum of the parts valuation model is you try to break down the individual businesses and then you value them individually and then you sum it all up together. The issue with those kind of calculations is that there tends to be a little bit of friction whenever you look at it on an enterprise level, because like I suggested earlier, hey, there might be some issues and some different priorities being set by the person managing it, and then they might essentially overlook some of the different businesses. So then valuations would essentially be air quotes punished in a sense. So from this perspective, if you do look at it, the market is largely efficient in trying to come up with a certain valuation of a particular business. But from this perspective, if let's say you keep the cake as a whole compared to splitting up into pieces, when you break the business up into smaller pieces, you are allowing the market to essentially reflect a view of that particular piece of the business. So specifically, for people that are interested in Amazon Cloud, AWS for example, maybe they just want exposure in AWS as a company and they don't want the e-commerce, they don't want the streaming and all the shenanigans that Amazon is doing. But that's it. If let's say you're only interested in AWS, you currently do not have the option to just solely invest into AWS. You have to buy Amazon as a whole company. So in this case, if you reflect it to Alibaba's perspective, it's the same. If people are interested in the cloud growth, they want to tap onto China's cloud market, they have no choice. They have to buy Alibaba, they have to buy Tencent, they have to buy Baidu. They can't just buy the cloud business or the cloud segment itself. So by splitting it up, it actually allows the market to essentially do their own thing. They can try to reflect whatever they want to reflect, and for businesses or for investors on the sidelines, if they want a specific exposure, they can just get that kind of specific exposure. And I think one important other factor that I wanted to point out is that because of this mechanism, this idea of ETF allocation. So for those of you who don't know, ETF is exchange traded fund. So for exchange traded fund, some of them run thematic ETFs. So thematic can mean maybe semiconductor, green energy, cloud computing, stuff like that. So if I were to presume that if let's say there is a cloud computing ETF, or specifically in China, they want a China cloud computing ETF or exposure, they must buy the entire enterprise. They must buy Alibaba, they must buy Tencent. They just can't own that specific business. But in this case, if Alibaba were to split themselves up, yes, they can just solely get the exposure in Ali Cloud. They don't want the e-commerce piece, they don't want the media piece, they don't want other pieces of the business. So that's generally why investors might be excited for having this entire splitting out of the business itself. And I think one other factor is that we always like to talk about, in the US specifically, there are many companies that adopted this strategy called the stock splitting. So Tesla is one of them. They did 1 for 5 and then 1 for 3 and stuff like that. So by stock splitting, theoretically it's the same. It's the same piece of business. It just splits up into a few different pieces and you get a cheaper stock price. So psychologically, it tells you that, hey, the stock is actually cheaper. But in theory, nothing changed. The business is still there, just that the share outstanding times 3 or times 5, and the market capitalization is exactly the same. So from this case, if let's say Alibaba were to split themselves up into 6 pieces, and let's say the e-commerce business becomes $30 per share, and then the cloud business becomes like $5, $8, $10 a share, it just makes people think that, hey, it's getting cheap. Alibaba, I thought it was like 100 plus and then it becomes $10. So all these are just psychological mind plays. It literally doesn't do anything to the business itself. I would argue that there is no fundamental shift in terms of making it a better business per se. But of course, we can continue arguing saying that, oh, maybe having a new CEO, a dedicated CEO is a better decision or a better essentially a better introduction for the entire business itself. And also, I just wanted to point out the fact that, hey, it's not necessarily a new thing for an enterprise to actually split itself up. I think JD is one of the very classic example. For those of you who don't know, JD's logistics business was actually split out of the business itself from the enterprise some time back. So if you go in and you punch in the ticker symbol, you can find JD.com, which is the e-commerce business, and then there is JD Logistics, which is the logistics arm. So what Alibaba is currently doing is basically that, and in a much larger scale, because Alibaba is a much larger company than before, and compared to many of its counterparts. So that's that. And I think there was also this discussion point saying that, hey, maybe after splitting up, we can essentially argue with the Chinese government, saying that, hey, it might not be there might not be any monopolistic concern anymore, because even though it's still under the same group, they all still share the same name under the Alibaba umbrella, but they can't essentially tap onto each other's connection because each different business units have their different priorities. But I guess that's a little bit of a stretch, but we'll see how it goes. I don't know whether the Chinese government will take it as an example or whether they will buy your argument or not. And I think one last important factor that I just wanted to kind of put it in as well. There's a car behind me, please pardon the noise. But yes, I think one important factor is, let's not forget, I think around Chinese stocks, the basket of Chinese equities, there's a huge amount of volatility. There are many people, many actors in the space, they like to release some sort of news and then they like to pump the stock up and then the stock goes down again. For those of you who don't know, just go and Google Alibaba stock price patterns. It's up and down, up and down, up and down. There's huge amount of volatility. And there's a lot of this quote-unquote pump and dump schemes going on. Not necessarily pump and dump, but yeah, just a huge amount of volatility. So for those of you who are really long-term investors, don't get distracted by all these noises. Sure, there might be some sort of benefits or advantages that can be reaped in the short term, but in the long term, just focus on profitability and focus on how the business is going to make money. So that's all I have to say. And also, there's this recent noise, I think it was uploaded yesterday. It's noted that one of the Chinese premier actually reached out to Jack Ma, and Jack Ma is currently back in China, trying to appease to investors and appease to businessmen, saying that, oh, China is open to investments and open to entrepreneurship again. Honestly, it doesn't really matter to me. I'm just focused on the business itself, and I hope you guys enjoyed the video. With that, I'll see you in the next video, but more importantly, I will finally see you on the moon. Goodbye!